Hello and welcome to BitTalks, the podcast that gives you all your daily news on crypto and blockchain. My name is Brandon and I am your host from BitTips. On today's podcast, we'll be discussing a variety of topics such as Samsung and blockchain. What is Facebook doing in its blockchain division? How is Nvidia adapting to the gaming revolution and crypto mining? Is Binance reporting legitimate trading volumes, and are other exchanges doing so as well? And lastly, we'll be talking a little bit about Bitcoin Cash and one of its lead developers, Amari Seshit. So, kicking things off, we have the president and CEO of Samsung SDS, which is an IT and consultancy subsidiary of the South Korean tech conglomerate Samsung Group, has decided to come out talking about why he thinks blockchain will be beneficial for Samsung in the manufacturing process. Now, this was reported by local media Sina Technology News on March 26. He was quoted from the BOA Forum for Asia 2019 annual meeting saying, "In the whole process of supply chain management, communication is very important. Data needs to be collected, and through blockchain and artificial intelligence, we can improve processes and enhance trust so that we can share information better, so a healthy process is established." During a forum devoted to development of data resources, the CEO of Samsung SDS, Hong-Wan Zhen, reportedly underscored the productivity gains that the real-time data analysis and prediction factor can bring in conjunction with blockchain technology. A Samsung official revealed last month that the company's new Galaxy S10 smartphone will include wallet functions for both Bitcoin and Ethereum, as well as possibly two other tokens. Samsung SDS has previously worked in blockchain with a partnership with major Dutch bank ABN AMRO on a pilot to use the technology for shipping purposes. However, now that the smartphones are going to have Bitcoin and Ethereum wallet capabilities, this shows that there may be new solutions in store for Samsung smartphones. According to Facebook's LinkedIn page, there are 22 new blockchain-related job postings. Job postings include things like lead commercial counselor, product manager, financial analyst, threat investigator for blockchain, technology communications director, data scientists, software engineers, brand marketing managers, product designers, and director for technical accounts with the SEC. Now, this comes in conjunction with Facebook's already existing about 50-strong blockchain team. They have been pretty quiet about what they've been working on in the blockchain space. According to these job listings, it appears that they're definitely looking for some new developers and potentially some brand managers. With all of the scrutiny that Facebook has been facing these last few months with their data leaks, it is very obvious that they are looking to be in pure compliance with the SEC. Perhaps the most notable listing is the director of the technical accounts for the SEC reporting team. Facebook is acutely aware that blockchain is creating some unique challenges when dealing with regulatory authorities. Interestingly, an investigation by Hardfork revealed that the biggest blockchain employers are actually not firms that are blockchain native. Rather, they are companies looking to add new streams of revenue to their business models using blockchain. Some of these notable companies include IBM, Ernst & Young, and Oracle. Last week, Twitter CEO Jack Dorsey tweeted that he's hiring some Bitcoin developers for his payments company Square. Now, there's definitely some benefits that Square, a company that processes credit card transactions, could use from blockchain. It could potentially decrease the amount of time for transactions and potentially allow for Square to lower the transaction fees for their users. Our next topic has to do with the changing needs in the crypto mining field. More specifically, Nvidia is beginning to exit the crypto mining field and enter into the gaming revolution. For those who don't know, there are only 21 million Bitcoins, and as such, crypto miners have frequently used Nvidia products to mine cryptocurrency. The graphics processor company has been ambitious to meet the demand of crypto miners, but it does admit that the market decline has hurt sales from that. Nvidia's CFO, Colette Kress, spoke to analysts and investors about the matter. She said that Nvidia is working to reduce the amount of unsold parts that it has in inventory. Nvidia remains confident about its revenue outlook and says that it is still on track for its 2020 forecast. Nvidia has done well to keep its numbers under wraps. The company reported $602 million in crypto-related revenues. However, analysts believe that number could be closer to around $2 billion, almost 3 times the price they've reported. The company predicts that their revenues are going to flatline from last year or even decrease by up to 4%. The demand for microchips is certainly changing. Recently, Nvidia has joined its competitor, Advanced Micro Devices, otherwise known as AMD, in finding new opportunities for its chips. Alphabet, the owner of Google, announced that it had chosen AMD for its new cloud-based video game streaming service. This service is thought to be a game changer for AMD as it provides the company considerable exposure in the cloud gaming market. With this technology, gamers will be able to stream and play their games without the need for consoles or high-powered graphics chips, all over cloud technology. In a bombshell report on Wednesday, Bitwise found that 95% of volumes on unregulated crypto exchanges are likely false. Bitwise is currently seeking approval for a Bitcoin exchange-traded fund proposal. This was submitted to the United States SEC. According to Bitwise, the vast majority of reported crypto exchange volumes are, quote, fake and/or non-economic in nature. The real market for Bitcoin is significantly smaller, more orderly, and more regulated than commonly understood, end quote. According to their statement, only 10 exchanges that are regulated have actual volumes. Among these exchanges include Binance, Kraken, Coinbase, Bitfinex, Poloniex, Bittrex, Bitstamp, Gemini, Itbit, and Bitflyer. Bitwise says that it got this report as a result of comparing order books on Coinbase Pro to a long list of other exchanges. While comparing, they identified a number of suspicious trading patterns. In particular, they said that many exchanges seem to have buy and sell orders placed in perfect succession. For example, there was one buy order and one sell order, one buy order, one sell order, and so on. While legitimate exchanges such as Coinbase Pro had a more random distribution of buying and selling activity, these unregulated exchanges were found to have far more perfect and even distributions of economic buy and sell orders. So why did they decide to do this? Why are the volumes being faked? The reason is actually quite simple, and it lies in a website that most crypto traders are very familiar with. According to the CEO of Binance, CoinMarketCap.com is the highest traffic website in the crypto space. It is the biggest referrer for all exchanges. Being ranked high on CoinMarketCap has benefits for getting new users. According to Zhao, CoinMarketCap brings more referral traffic to Binance than any other website. This makes sense considering that CoinMarketCap is arguably the biggest website in the crypto space, being ranked 448th site in the world according to Amazon's Alexa. Exchanges faking trading volumes are doing so in order to gain a high standing on CoinMarketCap. Matt Hugin, the head of research at Bitwise, told CoinDesk that he believes the company's report won't have a negative impact on the company's push for a Bitcoin ETF approval. According to Hugin, the new report actually proves that the real and foundational crypto market is uniquely resistant to manipulation. Quote, "The reality is that the fact that there is a fake volume in the crypto market is not news. We are just the first firm to know and to take true comprehensive approach to proving and quantifying it. In addition, the regulated CME futures is much more significant than most people think because they have the denominator wrong." End quote. The SEC has until the end of the month to accept, reject, or extend its review for the Bitcoin ETF proposal from Bitwise. Last thing for today's episode is Amari Seshet, one of the leading developers of Bitcoin Cash, has decided to renounce his membership in one of the projects that paved the way for the controversial cryptocurrency. Amari has decided to move away from the Bitcoin Unlimited project, which is a code implementation that arguably got Bitcoin Cash off the ground. Bitcoin Unlimited was the code that originally increased Bitcoin Cash's block size parameter. Amari Seshet has decided that instead he will stick with Bitcoin Cash as the lead developer of Bitcoin ABC, but he is unhappy with the direction of Bitcoin Unlimited. Seshet claims that Bitcoin Unlimited's development process has been lingering with bugs in the code, which has allowed an unknown developer to crash most Bitcoin Unlimited nodes. While Bitcoin Unlimited did help pave the way, it was actually Bitcoin ABC in 2017 that was the first to go through with increasing the block size parameter. Around this time in the community, Craig Wright, the claimed developer of Bitcoin without evidence, joined Bitcoin Cash's ranks. A bit over a year after Bitcoin Cash launched, Wright went to war with some of the developers, including Seshit, and this ultimately broke Bitcoin Cash into two cryptocurrencies, Bitcoin Cash and Bitcoin SV. When this happened, Bitcoin Unlimited released software that supported both cryptocurrencies. However, this code split ended up splintering the Bitcoin Unlimited team, with some eagerly supporting BSV. But the drama doesn't stop there. Just a few days ago, one of Bitcoin Cash's head coders, Anthony Zegers, left Bitcoin Unlimited as a member, inspiring Seshit to follow him as well. Seshit was quoted saying, "My goal is to make Bitcoin Cash successful. Life is too short and convenient. Sound money is a goal too important to be distracted from." Now, hopefully we will see some unification in the Bitcoin Cash development community. It is a cooperative community and we don't want this project to be undermined. It has a pretty nice marketing team and we look forward to seeing what they're going to put forth in the future to improve money and the quality of life for people around the world. That concludes the first episode of BitTalks. We hope you made it to the end. There will be more episodes coming in the near future, so tune in. We'll see you then.